My dear trader, you should understand. Staying motivated is the only thing that keeps you calm and consistent in trading. Most traders lose money not because of bad strategies, but because they cannot stay consistent. In this lecture, I will prove you the exact steps professional traders use to stay consistent, how they manage risk, place stops, handle drawdowns, protect their mindset, and still grow their accounts slowly and safely, even when the charts look impossible. If you listen until the end, you will understand a complete process you can follow tomorrow morning, even if you're a beginner. Staying consistent is the difference between a trader who burns out and a trader who grows slowly, steadily, and confidently. This episode is simply a conversation, you and me, about how real traders think, operate, survive, and evolve. In this moment, you will understand exactly how professionals stay consistent, even when the market is unpredictable, even when losses happen, even when emotions rise. So sit back, relax, and let's begin. Section 1: The truth about consistency. Consistency is not intensity. Consistency is not motivation. Consistency is not feeling confident. Consistency is repetition. Repetition of a process, not repetition of results. Most beginners think consistency means winning every day, few losses, clean entries every session. But professionals know something different. Consistency means showing up and following the same risk rules, the same stop-loss rules, the same management plan, even when your emotions want the opposite. Let me say something honestly. You don't need to be perfect to be consistent. You need to be disciplined when you are imperfect. Professionals have losing days. They have losing weeks. Sometimes even losing months. But the reason they survive, and eventually thrive, is because their process remains untouched. Your job as a trader is not to control the outcomes. It is to control the inputs. Your entries, your stop-loss, your risk, your management, your mindset. When those are consistent, your results eventually stabilize. Section 2: Why traders lose consistency. Let's go deeper. Why do traders fail to stay consistent? Reason number 1: changing strategies too often. A trader tries strategy A, loses 3 trades, jumps to strategy B, then C, then D. No strategy survives long enough to show its edge. Reason number 2: emotional risk-taking. Small risk when confident, big risk when angry. No risk plan. This destroys consistency immediately. Reason number 3: not accepting the stop-loss. The moment you move a stop-loss just a little bit, consistency dies. The moment you close too early because it's scary, consistency dies again. Reason number 4: no journal and no review. If you don't know what mistakes you are repeating, you can't fix them. Consistency is not a battle with the market. It's a battle with your own impulses. Section 3: The professional process. Now let's break down the professional consistency framework. These are the 5 pillars that professional traders repeat every single day, every single week, every single month. Pillar 1: one strategy, one phase of market. Professionals master one thing at a time. If you trade, structure, EMA flow, break and retest, session breakout, then choose one, and commit for 30 to 50 trades. Consistency is repetition. Repetition needs structure. And structure needs one strategy at a time. Pillar 2: risk management that never changes. Professionals decide risk before they open their charts. They follow a simple formula. Risk per trade, 0.5% or 1%. Max trades per day, 1 or 3. Max daily loss, 2%. Max weekly loss, 6%. Once these limits are hit, they stop trading, no negotiation. This protects your psychology even more than your money. Pillar 3, stop loss behind structure. Professionals place their stop loss behind strong market structure. Below a higher low. Above a lower high. Never emotional. Never random. Never too tight. A stop loss is not an enemy. It's a guard. Pillar 4, profit booking rules. Professionals don't guess exits. They follow. Partial at 1-to-1 ratio. Move to break even only when structure confirms. Final take profit at 1-to-2 or 1-to-3 ratio. No emotional closing. Repetition of exits equals consistency in equity curve. Pillar 5, journaling. Every trade is recorded. Screenshots. Entry reasons. Session. Emotion. Structure. This is how you discover what you keep doing wrong. This is how you improve faster than 95% of beginners. Section 4, reality of trading. Here's the truth most YouTubers never tell you. Reality 1. You will face losing streaks. Even with a profitable strategy, you might lose 4, 6, or even 8 trades in a row. This is completely normal. Reality 2. Consistency does not mean trading daily. Some days, the best trade is a no trade. Professionals skip bad days. Reality 3. Drawdowns happen to every trader. Professionals survive because their risk is controlled. Reality 4. Slow growth beats fast mistakes. Fast money usually ends fast. Slow money can last a lifetime. Section 5. Examples from gold to USD. Now, let me walk you through a simple example using gold. Imagine the market is in a clean bullish structure. Higher high. Higher low. Price pulls back. A beginner sees a candle and jumps in anywhere. A professional waits. The pullback continues. Price taps into a demand zone. Structure forms a higher low. Now the professional prepares. Risk 1%. Stop loss below the higher low. Partial at 1-to-1 ratio. Final at 1-to-2 ratio. No fear. No rush. Just executing the plan. The same plan. Every day. This is consistency. Section 6. Mindset of a consistent trader. A consistent trader thinks differently. They see losses as information. Not punishment. They see stop loss as protection. Not failure. They see the market as a long-term game. Not a daily lottery. They don't rush to be rich. They aim to survive long enough to be profitable. Consistency is a personality you develop. A calm attitude. A patient discipline. A quiet confidence. You become consistent when you stop trying to impress the market. And start listening to it. So my friend, if you want to stay consistent, remember this. One strategy, one risk model, one process, one journal, one mindset. This is how every real trader grows. Thank you for listening. Stay calm, stay patient, and stay consistent. If you find this lesson helpful, do you give us a like?